Hello and welcome to Vox Markets. I am John Human and I am joined today by Tony Burt, founder and chief executive of fast-growing premium beverage company, East Imperial. How are you doing, Tony?
I'm very well, thank you. How are you?
Yeah, not too bad, not too bad. Enjoying the cold here in England and suffering somewhat, but we'll motor through.
Good
So yeah,
luck.
we're going to talk about what's been quite an extraordinary year of transformation for East Imperial. Perhaps the best place to start is because there's been some news recently, but we'll come on to that about distribution in Asia. But let's just talk about some of the headline numbers. The progress you've made on trading this year in terms of revenue growth, margin improvements. Just talk us through the headlines.
Yeah, revenue is up overall, which is very pleasing. Obviously, we're not in a position to tell you exactly where we're going to land for the year, but all signs are that we're going to be well up, and that's very, very positive for us. We've still had a number of supply chain headwinds, which continued in 2022. But I think another thing that's very, very positive is just seeing APAC margin returning to sort of pre-COVID level, which is very, very encouraging despite those headwinds that we've had for a long time. And I don't think we should forget it's been nearly 3 years, January 2020, since China first shut down. The US remains quite challenging with ongoing shipping and logistics costs. That's been well publicized. We've talked about that before. But I think more on the positive side, again, we're seeing a steady decline in those costs. So we're really optimistic that will continue to flow into 2023. So I think the general message is that revenue is well up where we want to be, and margins have continued to be challenged, but are improving, which is largely positive.
No, it's an extraordinary performance given the backdrop, the inflationary backdrop, and the supply chain backdrop. So you mentioned that revenue is growing strongly. What's driving that? We're talking price increases to reflect some of the increase in the supply chain costs, or volume growth.
I think it's volume growth. We haven't done any price raise increase in any of the markets. It's something we probably should be looking at, but not at this stage. We've made that decision. But it is actually just sales growth. I think obviously North America with more reach and spread there now has contributed to it. But also what's been very pleasing is Asia Pacific, which remains a cornerstone of our business. We've seen some strong growth in New Zealand, and with Singapore opening up again, and other parts of Asia, which have been key markets for us for a very long time, opening up in the last 6 months or so. We've seen demand to surge back in those areas.
And presumably is that volume growth that is key to taking you through to profitability?
Yes, very much so. We're just going to continue to drive that volume. But also, once volume brings us a number of clear benefits, obviously the top line growth that you mentioned, but obviously greater buying power, and also, more significant volumes also certainly provides more significant revenue to cover semi-fixed costs of the business, such as salaries.
Absolutely. Let's talk about each of the markets in turn, starting with North America, which you mentioned first. There's been some massive progress there, in particular a bottling agreement that you signed recently. Tell us about the sort of general progress in North America and how you see the opportunity there shaping up.
Yeah, well, we mentioned in January this year the national distribution deal with RNDC, and we spoke to the market then about what our plan was, and that was really to start onboarding those states. So that started late May, early April, and that was 11 states that we wanted to get on board. Now things take a long time to onboard a distributor in the US. Each region or each city or each state, as you were, would actually acts quite independently, so it has your own systems. So we have to go through and make sure we're set up correctly with pricing tiers and what have you at each one of those states, and that takes a long time. These are big businesses and it takes a lot of man hours for us to get that done, but I'm pleased to say that it has been done, and we're now starting to see the benefits of that. We sort of saw the back end of summer in North America, starting to see a real strong uptick in sales, and particularly key regions like Southern California, which has just been very, very encouraging for us.
What does the bottling agreement with Lion specifically mean for the group?
Well, if the backdrop, as you talked about, of the last 2 or 3 years of COVID and the supply chain headwinds, has really meant we've had to make some big calls about how do we actually get our product to market more efficiently. and cost effectively as well. So it was our number one operational priority in 2022 was to make that appointment. And there's a lot of hard work gone behind that, doing our due diligence and who the right partner was going to be. So Aaron, who's our global head of supply chains, has actually been in the market in the US 3 times, seeing over a dozen potential partners. And so, that announcement a couple of weeks back about moving ahead with Lion Breweries is absolutely key to us, more so for 2023 now. As we sort of go into 2023 and the trajectory that we're on in North America, we are going to have to start bottling closer to market, and this allows us to do it.
And presumably that improves profitability then if you're bottling closer to 100%. Market. Absolutely,
100%. To give your listeners and viewers a little bit of indication, prior to COVID, it was costing us to send a 20-foot container from New Zealand to the US around $3,000 US. It got up to $13,000 US. Now it's dropped below 10,000 now, and as I mentioned earlier, we're really optimistic that it's going to continue to drop. But yeah, it sees us now just sort of getting rid of that movement from New Zealand up into North America and actually bottling closer to the market. So yeah, there'll definitely be a lot of benefits for the bottom line.
Yeah. So, and it's a massive market too. Presumably, huge opportunity still ahead there.
Yeah, completely. It's a huge market, huge opportunity. And I think what's really important for us is just to stay focused on who we are and what we do, and we position ourselves in the market comparatively to our competitors. What's really important to us is to continue to occupy the ultra premium space. We're seeing a lot of consolidation in the market. I'd say commoditization, actually, in terms of competitors kind of racing to the bottom over the last couple of years and being finding more budget channels, and that's just not where we operate. So, it's really key for us to remain focused and single-minded on who we are and what we are and who our customers are. And the US is a huge opportunity for us.
Another huge market is China, and you signed a distribution agreement there in August. But obviously China is that a market that's not without its troubles. The zero COVID policy problems have been well documented. Has this affected your trading there? And the signs that they're opening up must be encouraging now.
Yeah, there's a couple of answers to that question. 100% affected us. As I said earlier, 20th of January 2020. That is when we first started seeing lockdowns in China, and that's when we started seeing demand starting to wane as a result of that. Now, we pulled back a little bit there. We were with a different distributor at that stage there, but the signs that we saw from our time in China were always very, very encouraging, and also being an Asia Pacific brand, there's great potential for us in that part of the world. Given the proximity to us and where we're located. Now, we said around this time last year, that while China was going through this zero COVID strategy and chasing that we'll use this time to actually survey the market and actually think about how we're actually going to enter the market and actually fulfill the market. And working with our advisory board, we've worked on this now again for sort of 8 or 9 months, and the appointment that we made recently was, again, was one of the big announcements for the year. One thing that we've learned in the past 3 years of lockdowns and restrictions is, as they're eased, there's a surge in demand. We see people trying to return to their normal way of life, and people start going out again. And it's really important for us to be positioned when that comes back in China. And what's been really pleasing to see in the last week or 2 weeks, particularly, as we're starting to see a little bit of an easing of those restrictions, particularly in cities like Guangzhou and Shanghai, which are a couple of the key cities that we operate in and will be operating in. So I'm pleased to say that the containers have all left New Zealand. They're starting to arrive now in China. So we're really poised to actually take advantage of that demand surge that we think is actually going to happen in 2023.
Yeah, absolutely. Tourism is obviously a big part of your business, and certainly luxury tourism, and that sort of ties in nicely with the news that you've announced this week, the distribution agreement in Vietnam. It's somewhere that I've been thinking about jetting off for a holiday. It looks like a lovely place. Can you tell us about what you've done there this week and the significance of that in terms of it as a luxury tourism market?
Oh well, there's a couple of things there again. The announcement again was really to show our intention of actually building out strong networks throughout Indochina and Southeast Asia. SUTL Group, who we've gone with, we are with them in Singapore. That announcement was made approximately about a year or so ago. Again, these were decisions that were made during the COVID and while we were building up these networks. And so this is really, again, fundamental to what our strategy is actually going wider and deeper into Southeast Indochina, Southeast Asia, sorry. So, it's actually key to us. Vietnam is a massive market. There's a lot of tourism returning there now, and it's a luxury tourist market as well. So we're really excited about extending our relationship with SUTL Group and going into this market and again and seeing the fruits of our hard work in 2023 and beyond.
And that particular distributor, they're pan Asian, as I understand it. So presumably that gives you the scope to go into more markets, to more aggressively.
Yes, it does. Yeah, it does. And and I've said this a few times that we're not in the business of collecting distributors or collecting markets or territories. We're in the business of going into territories that we know that we can make a difference, and there's an opportunity for us. And so, we will pick off as we're going what we think is actually viable and what we can actually do. And SUTL Group is a perfect partner for allow us to do that. They've got the networks and they're already distributing a number of high-profile international brands throughout those regions. They have the know-how, have the manpower. So we'll just work with them closely and identify when the next market's going to be and keep rolling through.
Sounds like the perfect partner for that particular region.
Does, very much so.
Let's talk about go back to sort of macroeconomic backdrop. And now as an ultra premium beverage company, I would imagine the sort of cost of living crisis, the inflation crisis, has affected you a little less. It's had an effect on discretionary spending around the world, particularly here in Europe. But have you seen any signs that that's affected you, or is it this particular market insulated to a degree?
Well, I'm pleased to hear someone actually say that we're somewhat a little bit recession proof, and I don't mean that in an arrogant way. We're not really seeing it where we operate at that high end of the market, and there could be a couple of reasons for that. Is that as I said, people are a bit more recession proof at that sort of end of the market, or we're just continuing to grow and reaching further and increasing our reach, so we're not really seeing it, but. From all signs, here in New Zealand, we have a cost of living crisis. It's talked about the same way. We're seeing it in the US as well. But one thing I will say, talking about macro trends, is we're seeing, for all the research we're seeing, is that the growth in premium spirit sales is continuing. And that's been driven by a number of new drinking occasions. Some of them have been driven by people drinking at home. Some of them are people that have become more discerning and wanting to go to cocktail bars now. Bacardi consumer survey from which I saw last week again is showing that in the US, 45% of people surveyed in that market, they were looking for drinks which have higher quality spirits and ingredients, and this is just this whole trend of premiumization in action, and that's really encouraging for us and really key to us. I think as a business, we're not exposed to the same channel as our competitors, and when I said that, as I said earlier, we haven't spent the last 2 or 3 years trying to get into every single channel, and a lot of those channels being the more budget channels, or where people, where research would suggest that where people are actually trading down in the retail environment. We're not really in that channel. We do a bit of retail here in New Zealand, but at the high end of the market. But I don't think we're as exposed as some of our competitors. And again, this is why it's so key for us. And tell all the team, to remain focused on that high end of the market, because that's our bread and butter, and that's where we belong, rather than trying to get into these sort of more budget channels where we're starting to see this trading down going on.
Yeah, I would guess in aggregate around the world that the channels that you target have significant potential in their own right without having to trade down, as you put it.
Yeah, completely. As I said earlier, the US is just a huge opportunity. Vietnam again. People are still traveling. People are still going on holidays. Is what we're seeing. We can't. There's. I'm just talking about this part of the world. There's actually a shortage of capacity and travel at the moment because everyone's trying to travel because they're trying to make up for lost time. And again, it sort of points towards this trend which we've seen is as things sort of open up, there's a surge of demand that people want to keep moving, and want to get back to doing things they were doing. And so again, this is playing well for us, and we're not seeing people trading down with East Imperial.
Mm. Oh, you raised some money earlier in the year, so that sort of presumably leaves you very well positioned to continue investing in the group. Specifically, what I'd like to understand is what comes next on the product front. So you've got some fantastic products already, but presumably new product development will help you drive further growth, tap into different types of sort of spirit segments. You introduced a light tonic this year, which presumably gives you a little bit more reach as well. What's next?
Yeah, well, we've just done a Christmas tonic, which is a little bit of a seasonal thing, but it's done really, really well for us, and it's really encouraging for us to sort of look at maybe other seasonal flavors that we could actually do. I wasn't really convinced that we were going to move it all, and I didn't want to have a whole heap of Christmas tonic on Boxing Day, but that's not going to be the case. Fortunately, it's all being moved out. But you mentioned it. Light tonic water was by far the most important SKU for this year for us. That's the whole wellness trend, which is global. I was going to say it's sort of confined to places like the US, but it's not. A lot of people are wanting to drink tonic water with less sugar, and I'm really, really, really proud, of what the guys did in creating that particular product. It's got the lowest calories of any premium light tonic water on the market. So that was key to us. It's just rolling out in the US now. It's doing very, very well in this part of the world. All the feedback has been great, which is, that's all you could really want. You create products, you put them out there, and then and you let the public decide. And the public's decided that they like this so far, so good. So we'll continue to roll that one out as we go into Q1, Q2 to further markets. But that's a real key product for us, I believe, in our future growth. We do have a couple of other products in the pipeline. But again, it's like I sort of mentioned, we're just not going to keep throwing things out there. We will look, and as we always have done, at what trends are in market, what trends we can pick up on, what flavor profiles people are wanting to drink, much like coffee, much like yuzu that we've done in the past, and we'll continue to do so. But we do have another couple lined up for the first half of next year.
Excellent. Well, I'm looking forward to trying them when I actually finally make it out to Vietnam. Thank you, Tony, for taking the time to speak to us today.
It's an absolute pleasure. Thanks for having me.